Good afternoon, and thank you all for joining us today. My name is Jalen Herbin. I serve as the Policy and Outreach Manager for the Center for Responsible Lending. Today, we're hosting a webinar on the Public Service Loan Forgiveness Program and the waiver application that is open now until October 31st. We have a special guest with us today, Ms. Ashley Harrington, who serves as Senior Advisor to the COO, Rich Cordray of Federal Student Aid, and it helps oversees the Public Service Loan Forgiveness application process and the current waiver process as well. We will bring Ms. Harrington on in just a second, and we'll give a few more minutes for people to join us, and then I will hand it over to her. Good afternoon. Thank you for joining us today.
So we are waiting a few minutes. Is that what you said?
Yes, ma'am.
Okay, cool.
Many of you may work for a public service employee, and so the reason we're hosting this webinar is to educate you on the public service forgiveness waiver and let you know about the consolidation process as well as the timetables and what needs to take place so that you can obtain this crucial and critical offer that the Federal Student Aid and the Biden administration is offering to borrowers. So with that, I would like to welcome Ms. Harrington in, and we will go ahead and get started with today's presentation.
Oh, my bad. Hi, everyone. I didn't realize they were waiting for me to start. I was sending an email. We can jump right in. Ashley Harrington, really happy to be here. Many of you may know I used to work at the Center for Responsible Lending, but I've been at the Department of Education for a little over a year now. And so when they asked me to come back and talk about PSLF, of course I said yes, because I would love to come back and be amongst friends and share this information. So we are going to jump right in. We'll say in advance that we are recording this. You will get the recording. We're also going to share the PowerPoint slides, so you don't have to worry about that. You will get all of this content, and we will also have time at the end to take some questions. So I'm going to go ahead and share my screen and jump right in. The host has disabled participant screen sharing. Eric, can you help me out?
Can.
Great. All right, let's jump in. So we're here today to talk about public service loan forgiveness. And I know we've also got some folks here who want to hear about one-time debt relief. So not to worry, we will cover that at the end briefly as well. But the focus of today is really public service loan forgiveness and the time-limited changes we have going on right now called the limited PSLF waiver. So what we're doing on the PSLF waiver is a part of the Biden-Harris administration's efforts at providing targeted student loan relief. Even before the announcement of August 24th, we had already provided more debt cancellation than any administration ever. And we are now at nearly $36 billion for almost 1.7 million borrowers in debt cancellation so far, and that number is only growing. And about $13 billion of that is for over 211,000 public servants who got their loans forgiven through improvements to public service loan forgiveness, and that's what we're here to talk about today. So let's talk about the limited PSLF waiver. In addition to those 211,000 borrowers who got forgiveness, another million plus borrowers have gotten closer to forgiveness. The average borrower has picked up a year's worth of additional credit. That's 12 fewer months they have to be burdened by student loans down the road. So this is not just for people who have been in repayment for 10 years or been in public service for 10 years. This is for everyone. So many people can benefit from this because even if you don't get forgiveness right now, getting closer to forgiveness is amazing. Being able to see that light at the end of the tunnel is so helpful. So please don't just think this is for certain people who have this amount of repayment or this amount of employment. It could be for you. And most of the time it is for you. 99% of the time when people ask me, should they apply? My answer is yes, because so many people can benefit from this and we want you to take advantage of it. So I like to start with the basics because I think it's important to start from the beginning and talk about how PSLF works in normal times before we jump into the waiver. So public service loan forgiveness is a program that was created by Congress in October of 2007, and it forgives the remaining balance on federal direct student loans after a borrower has made 120 qualifying payments while working for a qualifying employer when they're applying for and receiving that actual forgiveness. And at the end of whatever's left over is forgiven and it's not taxable income. So this flow chart just kind of lays that out and gives you that background. But we like to say you had to have the right loan with the right repayment with the right job. And we're going to dig into each of those pieces. So let's start with the right loan. To count for PSLF, it had to be a direct loan. And that does include consolidation loans and Parent Plus loans. But we're going to talk briefly about Parent Plus loans next. It didn't include FFEL program loans. Those are federal family education loans. These are loans that were originated by private lenders like Sallie Mae or Wells Fargo, but guaranteed by the federal government. Also doesn't include Perkins loans. These are loans that were originated by institutions of higher education and guaranteed by the federal government. And it didn't include any other federal or private student loan. And what's interesting is that back when PSLF was created in October of 2007, the FFEL program, the guaranteed loan program, was actually the bigger program. There were way more FFEL borrowers than direct loan borrowers, but these folks could not automatically benefit from PSLF. They could consolidate. These borrowers have always been able to consolidate into the direct loan program. But when they did that, they started at zero. They didn't get any credit for the time prior to consolidation towards PSLF. Even if a borrower had direct loans and consolidated for whatever reason, once they did that, they started at zero. They didn't get any credit for the time prior to consolidation. So let's talk about the right repayment. To count towards the 120 has to be on time, has to be made on a standard plan or any income-driven repayment plan, has to be for at least the amount due, and it can be non-consecutive. We get a lot of questions from folks like, I took time off, or I went back to school, or I went to the private sector. Does that matter? Absolutely not. Your journey is your journey. Everyone's careers don't function in a straight line. Some folks will get to 120 payments in exactly 10 years. Some folks will not get to 120 for 15 years or 20 years. That's okay. That's up to you. It does not have to be consecutive. It doesn't have to be with the same employer. Your journey is your journey. It can't be more than 15 days late. Can't be made on a graduated, extended, or alternative plan. Can't be for less than the amount due, and it can't be made when not required. So if you're in school and your loans are deferred, or you're in that grace period following when you leave school and you make a payment, it doesn't count because it's not required. So a quick note on Parent Plus loans, because I did mention that they are eligible if you have direct Parent Plus loans. So Parent Plus loans are not excluded from PSLF, and it is based on the parent's employment, not the student's, because it's the parent's loan. The thing about Parent Plus loans is they're not eligible for all income-driven repayment plans. In order for a Parent Plus borrower to get access to income-driven repayment, they have to consolidate. And then once they consolidate and they have a direct consolidation loan with an underlying Parent Plus loan, they are then able to access one of the income-based plans. It's called ICR, Income Contingent Repayment. And while it is an IDR plan, it is the least generous of the IDR plans. So we do encourage parent borrowers to use our loan simulator and compare that ICR payment to the payment they could be making on a graduated or extended payment plan and make the best decision for them based on the long and short term, their long and short term goals and situations. So we talked about the right loan, we talked about the right repayment. Let's talk about the right job. To count as PSLF employment, it has to be full-time, which we define as 30 hours a week or the equivalent. For government, that's federal, state, local, tribal, or territorial, and it does include military. It includes all 501c3 nonprofits, and it includes some other nonprofits if they provide a qualifying service. So that's things like emergency management, public health, early childhood education, and things like that. It doesn't include part-time work if it doesn't add up to full-time. Doesn't include volunteer work. So if you're not getting paid, doesn't count. Doesn't include any for-profit entities, no matter what you do for those entities. Doesn't include labor unions and doesn't include partisan political organizations. So we like to say it's about the employer. It's not about the job. We're not going to ask you what you do for that agency or that nonprofit. We're not going to ask you your job title. We're not going to ask you how much you make. We don't care. We just want to know who pays you, who's on your W-2, who's on your pay stub, and is it a federal, state, or local or tribal government entity, including public schools or military branches? Is it a 501c3 nonprofit, or is it another nonprofit that provides a qualifying public service? And if it is, it counts. You can even have multiple part-time jobs and it can add up to full-time employment. So if I work 15 hours a week at a state agency and another 15 hours a week at a 501c3 nonprofit, I work 30 hours a week in public service and that counts as PSLF eligible employment. You also, under normal rules, have to be employed with an eligible employer at the time you apply for and receive forgiveness. Remember, we're talking about normal PSLF. We haven't gotten to the good stuff, the limited PSLF waiver yet. There's also something called Temporary Expanded Public Service Loan Forgiveness, TEPSLF, which is not to be confused with the limited waiver. Again, we're not there yet. This is a program that was also created by Congress through appropriations, and it was just to help borrowers get forgiveness if they had made some or all of their payments on the wrong payment plan. So if they had made payments on the extended or graduated plan, this could help them get forgiveness. So I do want to flag that right now we're in the midst of the payment pause. We recently extended it through the end of December of this year. So we extended the pause on payments, interest, collections through the end of December, where we will re-enter repayment come January. Just want to make sure that everyone knows that every single one of these payments, even though we haven't been, every single one of these months, even though we haven't been required to make a payment since March of 2020, if you have been on the payment pause and you've been able to maintain public service employment for any or all of those months, you can get credit for those months towards PSLF. I'm gonna say it again because no one ever believes me the first time I say it. You can get credit for every single one of these months towards PSLF if you were able to maintain public service employment. So if you were able to maintain employment the entire 30 plus months, that's 30 plus months you can get towards PSLF, and you're already more than a fourth of the way towards 120 payments required for forgiveness. So that's the basics of PSLF. And now we're gonna talk about the limited waiver. Over the years, you may have heard there have been tons of issues with PSLF. High denial rates, confusion, people not knowing what type of loans or what repayment plan they had to be on. And it led to the fact that by the time this administration had come into office, only 7,000 borrowers had gotten forgiveness. And now we're at 211,000 and growing. So how do you get there? You get there through the limited waiver. This is something we announced in October of last year. And under the waiver, borrowers can get credit for past periods of repayment that normally don't qualify for PSLF. Under these new time-limited rules, you can get credit for any prior period of repayment, no matter the loan program, no matter the repayment plan, no matter whether you made a payment in full, or made it on time. It doesn't matter. We just want to know if you were in something we call active repayment status, and we define that very generously. We are even counting some periods of deferment and forbearance. So basically what I'm asking you to do is all the things we just talked about over the last few minutes, about 90% of it, put it in a box, put it on a shelf, because right now it doesn't matter. We literally don't care what repayment plan you've been on. We don't care if you still have Feller Perkins loans. We're not looking at any of that. We don't care if you missed a payment. You could have technically been delinquent. As long as you weren't in default, you can get credit. This is huge. That is how you get from 7,000 people to 211,000. That's how you get 1 million plus people who are a year closer to forgiveness. We didn't change anything about qualifying employment. So you still have to have PSLF eligible employment for all of those periods, but this is huge. This is transformative. And this is for borrowers who have direct loans, those who have already consolidated into the direct loan program, and those who consolidate into the program by October 31st of this year. So that's the deadline. That's the first thing I hope you take away, is that you can still take advantage of this. There's still plenty of time, but don't wait. It ends October 31st. After that, we go to normal PSLF rules. So this is for you, even if you're not at 120, because remember, PSLF will still be around. It's not going away, but the waiver ends on October 31st, and we want everyone to take advantage of that. So the biggest piece of this is that payments made prior to consolidation are now eligible. So before we talked about how when you consolidated, you started at 0. Under the waiver, that's not the case. If you've been told before you start at 0, under the waiver, that's not the case. You can get credit for time prior to consolidation, no matter the loan program, no matter the repayment plan, no matter the loan type. There is an exception for Parent Plus. We'll talk about that next. But it doesn't matter. You can still consolidate. Even if you still have Perkins or Fell loans now, you can consolidate by 1031 and you can take advantage of this waiver. You still had to have been employed full-time for a qualifying employer. And if you still have Fell or Perkins loans, you need to consolidate now. If you've never submitted a PSLF form, you need to do that by October 31st. That's how you raise your hand and say, look, I'm working towards PSLF. I want to take advantage of the waiver. This is how you identify yourself. So this is just a chart that kind of lays out the difference. On one side, we have normal PSLF rules. On the other side, the requirements under the limited waiver. So under normal rules, you could only get credit on direct loans. Under the waiver, you can get credit for direct Fell or Perkins loans. Under normal rules, you had to have made the payments on a standard or income-driven repayment plan. Under the waiver, any plan counts. Under normal rules, they had to have been on time for the right amount, all of that. Under the waiver, doesn't matter if it was late, if it was less than the amount due, or even if you missed it. Under normal rules, you could only get forgiveness if you were working for a qualifying employer at the time of application and forgiveness. Under the waiver, you don't have to be currently employed with a qualifying employer. So you can be retired, you can be in the private sector. If you already have your 120, you can get your loans forgiven right now, whereas normally you had to show you were actually still working in public service. Right now, we have waived that. So you might fall into one of 3 borrower groups, right? You might only have direct loans. If you only have direct loans, you don't have to worry about consolidating. You just want to make sure you get at least one PSLF form in by the deadline. Now, you don't have to worry about consolidating, but if you only have direct loans, you might want to consolidate if you have loans that have differing periods of repayment. So like you went to undergrad, then left school, went into public service, and then went back to grad school. So now you have undergrad loans that have like 30 months of PSLF repayment and grad loans that only have 10 months of PSLF repayment. If you consolidate now, before the waiver is over, that entire consolidation loan will get at least those 30 months for those undergrad loans, meaning that you can get your grad loans forgiven sooner based on the undergrad loans. Just something to think about. If you previously consolidated into the direct loan program, you want to submit forms for the time prior to consolidation because how you can get credit. And if you still have Fell or Perkins loans, you have the most to do because you got to consolidate and get that form in by 1031. So a quick note about Parent Plus loans in the waiver. I did note that Parent Plus loans are PSLF eligible, but they don't get additional credit under the waiver. So if you're a Parent Plus borrower who consolidates a direct consolidation loan, you have a direct consolidation loan that only has underlying Parent Plus, you're not going to get any additional credit for the time when it was a purely regular old Parent Plus loan. You might get additional credit for the time after consolidation if you missed a payment or you were on the wrong repayment plan or something like that, but not for the time when it was purely regular old Parent Plus. Now, you could get additional credit if you consolidated your Parent Plus loan with your own student loan. So if you had both and consolidated together, the direct consolidation loan would get additional credit based on the student loan, just not the Parent Plus loan. So we get a lot of questions from folks about how do you determine your loan type, right? I Fell, Perkins, direct, I know Stafford, I know unsubsidized. Those are the things that I remember. So the best way to find that out is studentaid.gov. If you don't have a studentaid.gov account, get one. It's where you're going to go to apply for PSLF, apply for consolidation, sign up for IDR. It's the best place to go to find out information and manage your loans. So you go to log into your studentaid.gov account, you'll visit the aid summary, you'll scroll down to the loan breakdown section, and you'll see a list of loans that you took out, and you'll be able to expand them and click view loans, and you'll click view loan details. And then you'll see a detailed name for each loan, and each loan will literally say direct or Feller Perkins. It's that simple. It'll say it in the title. If you see loans that don't say direct, that's your cue to know that you would have to consolidate those for PSLF. So I do want to flag some things about consolidation, because while many folks are going to need to consolidate, take advantage of the waiver, there are some things to know. So when you consolidate, you get a new loan, right? And so your monthly payment could change. It could go down, but it could also go up. And that's because if you no longer have a partial financial hardship, you could lose access to some of the more affordable income-driven plans. If you have unpaid interest and fees, your principal balance is going to go up because they're going to get capitalized. And your new loan will generally have a new interest rate based on a weighted average of the loans you consolidated. You don't have to consolidate all of your federal student loans. When you go to the application, you'll be able to pick and choose which loans you want to consolidate. You can consolidate 1 loan, 3 loans, 5 loans. It's up to you. And that's something to think about, because while you need to consolidate non-direct loans by October 31st to take advantage of the waiver, if you consolidation loans that include commercially owned Feller Perkins loans, so loans that are still owned by Sallie Mae or Wells Fargo or someone, could lose eligibility for one-time debt relief. You can learn more at studentaid.gov/debt relief, and we'll talk about it a little bit more in a bit, but just wanted to flag that that is something that you do have to take into account if you're thinking about both, because you can apply for both PSLF and one-time debt relief, but if you have commercially owned Feller Perkins loans that weren't on the payment pause, this is something to think about. So keep in mind, once your loans are combined as that direct consolidation loan, once it's done, you can't undo it. So we're doing allowed student loans. Before we got to August, we were already doing a lot, and this just added on to it, but this is another really great thing. This is something we announced in April. It's called the IDR payment count adjustment. We're implementing that later this year and next year. And it's really to help with issues in borrowers actually getting forgiveness for IDR, and issues with how servicers are counting and giving people credit for IDR, which offers forgiveness after 20 or 25 years, depending on which plan you are on and which loans you have. So under this adjustment, we're giving borrowers credit who were steered into long-term forbearances. And we define that as 12 or more months consecutive or 36 or more months cumulative. And if you have those, you can also get that credit towards PSLF if you certify employment for those periods. We're also giving borrowers credit for months spent in deferment prior to 2013, that was as long as it was an in-school deferment, and for economic hardship deferments after January 1st, 2013. And we're gonna do this automatically later this year and next year, but you're still gonna have to certify employment if you actually want this to become PSLF credit, not just IDR credit. So under the waiver, there are several forbearances and deferments that automatically count. First, those long-term forbearances, the 12 or more months consecutive or 36 or more months cumulative we just talked about. The deferments prior to 2013, as long as they weren't in school, economic hardship deferments, some military-related forbearances and deferments. So if you were in active duty status and your loans were in forbearance and deferment, you can still get credit. And while it's not automatic, you can get credit for some short-term forbearances by submitting a complaint to your servicer. And remember, for all of this, you still have to certify employment for all of these periods. So quick recap, take advantage of the waiver. You want to confirm your employer is qualified. We're going to talk about how to do that next. Consolidate those loans if you need to. Submit a PSLF form. We'll talk about that next, and do it all by October 31st. So how to apply for the waiver. So please note that there's no separate application for the waiver. It's the same old PSLF application that you've been seeing for years. It looks like this. This looks familiar to many of you, hopefully. So it's the same application. It's just that if you apply before 1031, you get the waiver treatment instead of the normal PSLF rules. If you apply after that, we look at where the normal rules will apply. So that's why you want to apply now. It's the same application, but you don't want to download this. You want to go to our help tool, studentaid.gov/PSLF. That's where you want to go to download, to generate your PSLF form for signature. And you want to use our help tool for a couple of reasons. First, this will enable you to have your form processed faster, but also if you use our help tool by 1031, that counts as making it in under the waiver. Even if you get it signed and actually submitted to MOHELA, the PSLF servicer, later, like December or January, that's okay, as long as you used our help tool to generate that form by 1031. If you use our help tool and you look up your employer and it shows up as undetermined or ineligible, as long as it's later approved and you did it by 1031, that counts as well. So that's why you want to use the help tool, because this gives us a digital record of you and you can get credit. You still have to later submit the forms, but if you do this by 1031, you've met the requirement. And remember, you just need one. You don't have to submit all of your employment for every single period by 1031. You just need to get at least one form in. You can do the rest later. So you'll log into your studentaid.gov account, and you're going to need that FSA ID. You're also going to need your employer identification number or your EIN. You're going to find that on your W-2 in box B, or on your pay stub, or by asking your HR department, but you're going to need that for every single employer you want to get credit for PSLF, because the first thing we're going to ask you for in the help tool, you don't type in the name, you don't type in the abbreviation, you type in the EIN. That's how you're going to look it up. So you're going to need that EIN for every single employer. So here's a bunch of resources that you can use to get more information about the waiver. The best place for information is studentaid.gov/PSLF waiver. To apply, you want to go to studentaid.gov/PSLF. That's the help tool. And then you'll submit that form to MOHELA, either by mail or fax or upload if they're your servicer. And for general PSLF information, you want to go to studentaid.gov/public service. Now I'm going to briefly talk about one-time debt relief that was announced on August 24th, because it's very exciting. So, we announced one-time debt relief of up to $20,000 for borrowers who received a Pell Grant in college and meet the income threshold, and up to $10,000 for borrowers who didn't get a Pell Grant in college and meet the income threshold. And the income threshold is $125,000 for borrower who filed individually, and that's based on your 20 or 2021 AGI, or $250,000 for married couples, and again, your 20 or 2021, whichever AGI counts. And most federal student loans are eligible: undergrad, grad, parent plus, grad plus, consolidation loans, FEL loans, and Perkins loans that are held by ed, defaulted loans. So the way I like to think about this is, if your payments were on the payment pause, and they weren't accruing interest and you didn't have to make a payment, they are eligible for student debt relief, and you can get access to this. Remember, for consolidation loans, you had to, if they had commercial FEL loans, you had to have consolidated by September 29th of this year to get one-time debt relief if there were commercial FEL loans. So if you had loans that weren't on the payment pause, you had to have already consolidated for one-time debt relief. Remember, these are separate things. And I had a slide called How to Prepare, but actually you take it out because the application is available. In case you weren't aware, the application was tested over the weekend and it went officially live yesterday. We've already had 8 million people apply, so it's working. Studentaid.gov/debt relief/application is super easy. You may have seen all of the memes and back and forth on social media about how people are doing it very quickly in places they probably shouldn't have done it, like while they're driving, and they should probably be looking at the road. But it just proves it's very simple. A few short questions, confirming your basic information. You don't even have to log into your studentaid.gov account. You attest to your income, and that's it. You don't even have to upload documentation. If we need something else from you, if you're selected for verification, we'll follow up with you later, but it's that simple. It takes less than 5 minutes, and 4 to 6 weeks from now, as long as you have federal student loans and you meet the threshold, right, you're gonna be able to get your relief. And we're encouraging everyone to apply by mid-November so that you can get your relief before repayment resumes in January. So for the application, studentaid.gov/debt relief/application. For general debt relief information, studentaid.gov/debt relief. Here's how you can contact your servicer if you need help with something. Here's how you can reach out to FSA on social and be on our contact center. And now we have a bunch of time for questions.
Still have to get used to technology through this pandemic. Thank you for that presentation, Ashley. We do have a few questions here in our Q&A function. And for those that are watching, if you have any questions, please feel free to drop them in the Q&A function and we will try to answer them. If not, we will have our team respond back to you via email as well when we send this out. The first question that we have here states, if you have returned to school, are you able to take advantage of the waiver? Do they need to contact their service provider?
So if you have returned to school you can still submit forms for the time prior to when you're in school. When you go back to school, even if you've been in repayment before, your loans are usually placed on in-school deferment. If you want to continue getting, so you're not getting credit right now, even if you're working full time. So if you wanted to get credit for right now, you would have to call your servicer and opt out of in-school deferment, which you can do if you've previously been in repayment. And then you can get on an income-based plan, or you can take advantage of the last few months of the pause and keep working towards PSLF. But you can get credit for the time when you weren't in school. So yes, go ahead and submit your form. Most of the time, Jalen, for anybody's question, my answer is going to be, just get the forms in and then go from there. But no, you're not going to be getting credit for the time when you're in school, but you can get credit for the other times.
Perfect. The next question is, what can borrowers do to cure defaulted student loans in the time to take advantage of PSLF?
So we are actually doing something called Fresh Start for defaulted borrowers, which will be implemented later this year, where we're bringing everybody out of default, giving you the opportunity to get back on track and stay on track with your loans. And so once that happens, you will be able to take part in PSLF again. And while that is technically after the PSLF waiver, there's something called the IDR adjustment that's going to help a lot of folks in many ways similar to the PSLF waiver. So stay tuned for that, but there is a pathway forward. In the meantime, you can go ahead and submit a form, because I'm gonna be quite frank with you, with the delays and because we have so many people applying for PSLF, which we love, MOHELA is not gonna get to anybody's form for at least 90 days or so. So if you wanna go ahead and submit a form, I think you should.
Thank you for that one. The next question is, want to confirm, if you submit employee certification forms after 10/31, but completed the rest of the application prior to using the help tool, could you still qualify under the waiver?
Yes, as long as you use the help tool and then you generate the form. So if I use the help tool on 10/30, my employer is eligible, I download the form, I have it, I did it on 10/30, and then I got it signed in December and then submitted it. Yes, I've met the requirements of the waiver. Now remember, also you only need one. So even if I had done another one already, that's fine too. But yes, if that was my only one and I did it that way, yes.
Our next question states, I just paid off my student loans in 2021. I am eligible for debt relief still. I have worked full-time for a 501c3 for 14 years. Are they eligible for a refund?
So normally, no. If you had direct loans and you made payments during the payment pause that you didn't have to make because you thought you had to, or you wanted to go ahead and get them paid off, you can get those payments refunded. But if you paid off a FEL loan or some other loan, no, we're not going to reinstate the loan. So the only special circumstance where we would reinstate a paid off loan is if you made payments during the COVID pause when you did not have to.
Our next question is, what date did borrowers with commercial FEL loans need to consolidate to qualify for the one-time forgiveness?
They had to have submitted their consolidation application by September 29th.
Would you include working in a church as part of the public service loan forgiveness?
Yes, churches are eligible employers. Some churches have not officially been designated 501c3s because they don't have to. So your employer, when you go to the help tool, it may say undetermined, just meaning it has to go through our employer adjudication team, but don't worry about that. Just finish the tool. But yes, that counts. Remember, it's not about the job, it's about the employer.
Perfect. Our last two questions for you. If you are still in school, can you still apply for the one-time debt relief?
Absolutely. It's available for our loan, anybody who has loans that were dispersed prior to June 30th of this year. So current students are absolutely eligible. And actually many current students will likely be eligible for automatic relief because they probably submitted a FAFSA in 2020 or 2021, and we have their income information already. We started notifying people eligible for one-time relief, I think today, and we'll keep doing that over the week.
If your servicer has changed, what will the new servicer still honor the complaint relating to forbearance when trying to qualify for PSLF waiver?
They should, but if you have any issues, you can submit a complaint to our ombudsman at studentaid.gov/feedback.
And there was one follow-up question, if you don't mind, in regards to paying off their student loans in 2021, should they still apply through the PSLF waiver? And that was the one in regards to, they stated, I just paid off my student loans in 2021. I am eligible for debt relief still, and I have worked full-time for a 501c3 for 14 years.
You should, I think people should apply for everything. There are going to be some people, right, who they get one-time debt relief, they still have debt left over, and so they keep working towards PSLF. There are going to be some people who they like, I think everybody should apply for everything.
Well, thank you for the presentation today. Thank you for joining us, everyone. We will be sending this presentation out, the recording as well as the slideshows and all FAQs to everyone who registered, as well as to our listservs. If you have any questions, please feel free to reach out to our student loan team or FSA at the Ombudsman's office if you have any other questions. Thank you. Have a wonderful day.
Thanks, Jalen. Bye, everyone.
Thank you.